What's up, everybody? Rob Cash is on the set. Before we get started, any mentioning of any digital asset is not financial advice. You're an adult. You know what to do. Seek help. Now, let's get on with the meat and potatoes of this video. Now, in the video I did yesterday, we talked about how the big three cryptocurrencies are going to be put into the derivatives market. And myself, is very excited about that because how large the derivative markets are in traditional finance. And if you really want to get into that, please check out the first video, but I'm going to try to put a couple of things in this video to kind of put it all together. So this video is like a spin-off or a part two of what we talked about yesterday with cryptos coming to the derivatives market. Now, I'm going to read the title here and I'm just going to try to keep it moving. I got some things to do, so hopefully I could do some justice with this video. So again, this is a 2.0 of what we talked about yesterday with cryptos in the derivatives market. Now it says, how big is the derivatives market? Let's scroll down here. It says, the derivatives market is, in a word, gigantic, often estimated at more than $1.2 quadrillion on the high end. That's all I got to read. This was in yesterday's video. Check it out. But I'm going to read that again. The derivatives market is, in a word, gigantic, often estimated at more than $1.2 quadrillion on the high end. So I want to share that with you. Now let's keep the ball rolling. Now, Wall Street vets bring Bitcoin, Ethereum, and XRP to new derivatives exchange. Now, for those that saw yesterday's video, bear with me. I'm trying to make it all in one so people can kind of catch up with what's going on. And I'm going to link all of these in the description. Now, those that saw yesterday's video know that this was the main topic or one of the main articles featured in yesterday's video. So I'm going to read the title again in 2 paragraphs at the bottom. Wall Street vets bring Bitcoin, Ethereum, and XRP to new derivatives exchange. Let's scroll down. 8 former developers from New York-based investment bank Morgan Stanley, which I'm more than quite sure you guys heard of, are launching a cryptocurrency derivatives exchange called FEMEX. The company claims the exchange is state-of-the-art and poised to be one of the most advanced in the industry. Now I'm going to scroll back to the top. The big three of the entire crypto space is going to be on this exchange. Bitcoin, Ethereum, XRP to new derivatives exchange. $1.2 quadrillion market, y'all. Let's move on. Now, I'm going to start by reading the title where it says, Ripple pushing to launch XRP in trillion-dollar derivatives market. Unveils new X-Spring investment. Now, I want to give Angela a shout out. She was in the comments in yesterday's video, and she got my attention, saying that, she said, I'm quite sure that Ripple is looking, to get into the derivatives market. She said, it was rumored. Let's clear this up. It's actually not rumored. You see it right here. Okay. But she, pushed me forward to look into that. And actually, this article is a few months old. So they were looking to do this around August, because I saw an article on it from August and October. So this rumor is now the truth. So let's get into the meat and potatoes. And thank you again, Angela, for pushing me towards this. Ripple says its recent investment in Vega Protocol is designed to help spur adoption of XRP in the world of derivatives. Vega Protocol recently raised $5 million from a number of investment firms, including Ripple's X-Spring, in order to help build and roll out its decentralized derivatives platform. Now I'm going to scroll down here to a quote. Exploring this developing industry requires building, partnering with, and investing in great teams that are aligned with the future of finance. As we build out our own engineering team, XSpring will continue to engage with DeFi teams and communities to support the future of DeFi, including the derivatives industry, $1 trillion market. Now, for those that don't know what the term DeFi means, it just means decentralized finance or decentralized financial institutions. Okay? $1 trillion market, quadrillion-dollar market with everything included. This is big. You might think I'm trying to pass hype on to you, but if you know anything about the derivatives market, like I mentioned in video 1, in traditional finances, especially what happened with the crash in 2008 here in the States, you know this is about to get heavy. Again, not hype. Do your research. Check it out for yourself. And again, I'll link all articles in the description so you can fine-tooth comb it for yourself. Now let's move on to the Vega Protocol. What is Vega? Now, this is a Medium article, so for those that really like to deep dive into, the inner workings and things like that, I'm going to link this article as well. Like I said, I link all articles. I'm going to touch on it just a little bit for you inner working geeks out there, and there's nothing wrong with that. What is Vega? Vega is a protocol for trading margin financial products on a decentralized network. The network, secured with proof of stake, will facilitate fully automated end-to-end margin trading and execution of complex financial products. Anyone will be able to build decentralized markets using the protocol. I'm not going to get deep into the article. I'm going to scroll down so you can check out, the different layers or the activities of this protocol. So it says, what sets Vega apart? I will read a little bit of that. Innovative liquidity incentives. Built-in liquidity incentives match traders and market makers across any financial product. Range of collateral options. Vega will connect to major blockchains for collateral, which can be in any digital asset, including Bitcoin, ERC20 tokens, and stable coins. So it's not just going to be all about XRP. So you see how this is expanding. Straightforward market creation. Pseudonymous, I hope I didn't mess that up. Whatever. Pseudonymous market creation means any participant can easily create and launch markets. Now I'm going to scroll down to some of their graphs and some of the titles here so you can check it out, so you can see what type of nutrients is in the meat of this article. So you see they have governance, trading, and down here where you see collateral. So they have a lot of different things you could check out in this Medium article for those that really want to know all of the inner workings of the Vega Protocol, which looks like it's being helped by XSpring. How will people interact with the protocol? So it gives you all these different, FAQs and things like that, how to create products and markets. And again, they have, I'm going to scroll down a little fast, guys. Down here, collateral and settlement on Vega. And here it has an example. You have Ethereum, and it has a person named Alice, and it shows you how they do things from end to end. So it gives you, graphs so you can better understand what the protocol is all about. Now, let's bring it on home with some desserts, okay? So let's get on to the next article. And again, all articles are linked in the description. Check this out, folks. Bitcoin miners turn to derivatives to increase their profitability as halving looms and fees decline. Before I get into the article, do you see the connection? Cryptos are moving to derivatives. Traditional finance is moving with crypto and derivatives. You saw the Wall Street article. Well, former Wall Street players are building a derivatives market for Ethereum, Bitcoin, and XRP. Ripple is looking to thwart XRP into the derivatives market. Indirectly, but they're doing it. Now you have Bitcoin miners turning to derivatives to increase their profitability as halving looms and fees decline. Do you see where this is going? And mind you, guys, I'm not discriminate. I don't discriminate against any crypto, especially the top three. So you see where this is headed? Bitcoin, Ethereum, and XRP. And if nothing else, definitely Bitcoin and XRP. Now, we might not be in the derivatives market ourselves, but look at the value that this is going to bring to the assets that we're holding. That's why I'm excited, okay? $1.2 quadrillion on the high end. On the average, like just say, the derivatives market, I got choked up for a minute. Excuse me, I'm excited. XRP is looking to infiltrate $1 trillion market with derivatives. But on the large scale across the board, with everything included, it's a $1.2 quadrillion market. Okay? And Bitcoin miners are looking to turn to that. So you have XRP and Bitcoin. They're going to get there on their own, even without the Wall Street players trying to do it. You see why this is dessert right here? This is the dessert. Okay? Now let's get on with this article. Bitcoin miners are currently earning 12.5 Bitcoin for each block they mine successfully. The third reward halving will cut down this reward to half, to 6.25 Bitcoin. There are about 5 months left when this event will occur and put a dent in miners' revenue. But before that could happen, Bitcoin miner fees are already down over 24% from the prior week. 24% down from the prior week. The 7-day average for Bitcoin miner fees is down to $166,669,000, which is down 52% from last month, but still up 188% in 2019. Now, let's go down here to the title where it says Bitcoin mining profitability on the decline. Back in August, Coinmetrics reported that the all-time revenue for Bitcoin miner topped $14 billion, while it took 8 years for miners to total revenue to surpass, while it took 8 years for miners total revenue to surpass the 5 billion mark, the next $5 billion dollars were exceeded in just 8 months. This is because of the increase in Bitcoin prices. In 2019 year to date, Bitcoin is up about 90% after losing 84% of its value in 2018 from the all-time high of 20,000 in 2017. So, you guys get this? I'm not even going to read the rest of that. You see the chart and all this other stuff. You can check it out when I link it. You can get into all the extra geekish stuff. Look at here. We're building products around hash rate and difficulty, Richard Rosenblum, co-founder of crypto trader GSR, told Reuters. But it's going to take more than a few months for there to be significant liquidity, because they're going to be talking about using the hash rate to hedge for the derivatives market. So let's scroll down here. Wait, no, I'm sorry. I think I passed it. Let me go back up here. Towards the end of October, Bitcoin hash rate hit an all-time high at 110 THS, and though it has taken a fall since then, it is staying around 90. As such, miners are now looking to hedge the hash rate and wild swings and electricity that can easily turn their profits to losses. Attracting traditional investors. A spike in hash rate means a need for more electricity that drives up the cost and eats into their profits. I'm going to say that again. A spike in hash rate means a need for electricity that drives up the cost and eats into their profits. But now come crypto miners. I don't know why they put come there. But now crypto miners have found the answer in derivatives that will allow them to hedge the hash rate. These derivatives will allow the miners to price in risk and provide clearer projections of cash flow, which is a prerequisite for investors. However, the market is at a very early stage, which is good for everyone. So I kind of got ahead of myself, so I apologize for that. So again, the main part, the meat or the dessert of this video and this article is that they'll be able to hedge their derivatives profits with the hash rate of Bitcoin. So they got something to leverage themselves now and be able to, make mining profitable for them. And that's great for everyone, for us that are holding. Okay, again, we might not be in the derivatives market, but we hold the assets. So if it becomes more valuable to everyone else, our value goes up. We make money. Everybody eats, to put it plain and simple. $1.2 quadrillion market across the board. This is why I am excited. This market is advancing, it's spreading, it's widening, however you want to look at it, whatever you want to call it. But just know that we're here, we're early, and we're going to be able to, enjoy the fruits of their labor. This is Rob Cash, and I'm on the set with derivatives, but I'm off the set for now.